Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is January 31st, 2026. Let's dive in.
Market overview. It is a nervous morning for Wall Street. Sarah. The Nifty 50 and Sensex are heading into the final trading sessions before the Union Budget 2026, and the calm we saw last year is officially a thing of the past. We've seen market swings in India surge from historic lows. Just a few months ago, we were being called the world's calmest equity market, but that skepticism is creeping back in. Overseas investors are staging a bit of an exodus, and that's reflected in the FNOQs, which look quite jittery this morning. Looking at the movers, it's a tale of two cities. On one hand, we have some incredible success stories. We're tracking a multi-bagger infrastructure stock that has soared from 28 Indian rupees to 232 Indian rupees. That's over a 700% return since the last budget. However, even that stock was down about 2% yesterday as traders started booking profits ahead of the big announcement. Nifty 50 heavyweights in the banking and IT sectors are seeing some pressure, particularly with the global tech sell-off we're witnessing. As we look at the Gift Nifty, it's suggesting a muted to lower start for our indices today. Investors are clearly moving to the sidelines, waiting to see what the finance minister has in her briefcase tomorrow.
International markets, it's not just India feeling the heat, Joe. Over in the US, the S&P 500 and the Nasdaq both closed lower. The big news driving the New York floor was President Trump's announcement that he'll name his choice for the next Federal Reserve Chair this Friday. The frontrunner seems to be Kevin Warsh, and the market responded with a dollar rally while stocks dipped. We also heard from Fed Vice Chair Michelle Bowman, who noted that the Fed can afford to take time with rate cuts because of persistent inflation, definitely not what the bulls wanted to hear. Moving to Asia, it's a sea of red. The Nikkei is down, and there's a massive story coming out of Jakarta. The CEO of the Indonesian Stock Exchange just resigned after an $84 billion market wipeout. That was triggered by MSCI warning of a potential downgrade of Indonesia to frontier market status. Meanwhile, in Europe, the FTSE, DAX, and CAC 40 have been struggling with a commodities rout. Canadian stocks actually had their worst day since the April tariff announcement because precious metals like gold and silver took a dive. In the futures market, we're seeing the dollar index gain strength, which is putting pressure on emerging market currencies, including the rupee.
Business story 1 and 2. India. Coming back to India, our top stories are dominated by this pre-budget volatility. First, let's talk about that FII exodus. Bloomberg is reporting that the resurgence of volatility is directly linked to growing skepticism among overseas funds. They aren't just selling. They are quiet quitting certain sectors until they see the fiscal roadmap for 2026. This is putting a lot of weight on domestic institutional investors to hold the line. Second, the infrastructure sector is under the microscope. While we mentioned that 700% multi-bagger earlier, the broader Nifty Infra Index is seeing heavy rotation. Companies involved in green energy and transport are the primary focus. There's a lot of chatter about the government possibly tweaking capital gains taxes or introducing new incentives for Make in India 2.0. This uncertainty is causing the VIX, or the Volatility Index, to spike. If you're trading today, expect fast moves and perhaps some stop losses being hit in the mid-cap space.
Business story 3 and 4 international. Turning to international corporate news, the energy giants are proving they can still pump out profits. Both Chevron and Exxon beat earnings expectations this morning. Chevron hit record production levels, and even with crude prices being bearish, notching the biggest annual decline since 2020, these companies are finding ways to reward shareholders. In the tech space, it's a game of winners and losers. SanDisk saw its stock soar 7% after a blowout report showing overwhelming demand for AI data centers. It seems the supply crunch for flash memory is back. On the flip side, Unity Software and other video game stocks plunged. Why? Because Google started rolling out Project Genie, a new AI tool that could disrupt how games are made. And for a bit of a pivot, the Chinese toy maker Pop Mart, the creators of those Labubu collectible toys, is setting up a European headquarters in London. They've had massive success in the US and are now looking to dominate the European market. It's a reminder that even in a volatile macro environment, specific consumer niches are still booming.
Economics and geopolitics. On the policy front, the shadow of the U.S. Fed is looming large over India's RBI. With Trump's potential pick, Kevin Warsh, the market is bracing for a more hawkish or unpredictable federal. Former World Bank economist Paul Romer actually warned recently that Trump might not believe in central bank independence at all, which is a massive geopolitical risk. Here in India, the RBI is watching the debasement trade closely, as the U.S. government faces a partial shutdown at midnight due to a Senate funding delay, and as Trump talks about a potential deal with Iran, oil prices have been fluctuating. Brent is sitting just above $70. For India, $70 oil is manageable. But if geopolitical tensions in the Middle East reignite, the RBI might have to put any hopes of a rate cut on the back burner to protect the rupee.
Key takeaways. So, what should you take away for your trading day? First, volatility is back in India. Don't be surprised by sharp swings in the Nifty today as we count down to the budget. Second, keep a very close eye on the US dollar. A stronger dollar usually means more pain for emerging market stocks. Third, the AI trade is diversifying. It's no longer just about the chipmakers, it's about the memory providers like SanDisk and the potential disruptors like Google's Project Genie. And finally, stay cautious on commodities. Gold's rally has stalled, and oil is sensitive to every tweet and headline regarding Iran. It's a day for defensive positioning rather than aggressive bets.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow us for more such updates. This is Sarah.
And Joe, signing off. Have a profitable day, everyone.